Welcome to the Gold Jumbo Training. My name is Danielle Ott and I'm with PRMG's Corporate Training Department. This training was recorded on August 22nd, 2016, and the information is correct and up to date at the time of the recording. However, before we begin, we would like to advise that while every effort has been made to ensure the reliability of the webinar content, PRMG's product profiles and their updates are the official statements of PRMG. In the event of discrepancies between the information in this webinar and the product profiles will always supersede the information provided here. This new jumbo product offers aggressive pricing and LTVs to 85% with no MI and loan amounts up to $3 million. This Gold Jumbo is a new jumbo for the retail channel only. The product launch date will be Wednesday, August 24th, 2016. The Gold Jumbo allows for loan amounts up to $3 million. It allows an 85% loan to value with no mortgage insurance. This is not lender paid MI, it is truly no MI. You can go down to a 680 credit score. Owner-occupied, second homes, and investment properties are allowed. Both fixed and ARM products are offered. The borrowers are allowed to get $250,000 cash back on cash-out transactions. Property types included are single-family residences, 2 to 4 units, condos, and PUDs. The Gold Jumbo offers fixed-rate products as well as 5/1, 7/1, and 10/1 LIBOR ARMs. As previously highlighted, primary residences, second homes, and investment properties are offered under this program. Purchase, rate, and term, as well as cash-out transactions are allowed. On cash-out transactions, the maximum cash to the borrower is $250,000. Maximum loan amounts is $3 million for primary residences or second homes, where the max loan amount for the non-owner properties is $1 million, and the minimum loan amounts vary based on product, property type, and transaction type, and are either $1 over the standard balance limit or $1 over the high balance county limit. The max LTV is based on the transaction type and property type, and the credit score can go as low as a 680 for owner-occupied and second homes and 700 for non-owners. This is the product matrix for the Gold Jumbo. We would like to direct you to the product profiles to allow you to further investigate the parameters of this program. We would like to make sure to remind you to look at your product profile for additional restrictions in Texas, including when doing a Texas home equity or a Texas 50A6 loan, as the LTV is limited to 80%. However, we would like to highlight a few things. You can go up to $3 million at an 85% LTV with a 680 credit score, but note your debt-to-income ratio would be limited to 35%, and at a 720 you can go to a 43% DTI. For second homes, you can go to 80% LTV for a purchase or rate and term. Investment properties or non-owner occupied properties allow loan amounts up to $1 million to a 75% LTV. Finally, there are cash-out options up to $3 million. However, as mentioned earlier, the max cash to the borrower is $250,000. This product requires compliance with the Dodd-Frank ability to repay rule. Things that will be considered when looking at the ability to repay may include making sure that the borrower will continue to have the income and assets that they have to continue the payment. Checking the current employment status. Making sure that the loan application is disclosed and on the loan application. Including the monthly payments on other loans. Including the principal, interest, taxes, insurance, and other association fees in calculating the ratio. Debts and alimony will be included when applicable, and making sure that the borrower meets the monthly DTI and residual income requirements. Finally, look at the credit history to make your decision. This loan product requires eligibility review for credit, collateral, and condos or attached PUDs by the investor. We always have to meet Appendix Q or the ability to repay requirements. This is a QM product, and we do not allow higher-priced mortgage loans or HPML loans. For this product, a 2-year established credit history is required. Trade line history will be discussed in depth later. For borrowers with multiple financed properties, there is no limit on primary residences and a max of 4 for second home and investment properties. There is a max DTI of 35% or 43% depending on loan parameters. Interested party contribution is allowed up to 6% for primary and second homes, greater than 75% LTV, and 9% for primary and second homes, less than or equal to 75%. Finally, investment properties are capped at a 2% limit for all LTVs. Reserve requirements. For loan amounts less than or equal to $1 million, where the LTV is less than or equal to 80%, the borrower must have 6 months reserves. For loan amounts less than or equal to $1 million, where the LTV is over 80%, the borrower must have 18 months reserves. For loan amounts greater than $1 million, where the LTV is less than or equal to 80%, the borrower must have 12-month reserves. And finally, for loan amounts greater than $1 million, where the LTV is over 80%, the borrower must have 24-month reserves. If the property is a second home and investment properties, then for each additional financed second or investment property owned, 2 months additional reserves are required for each property. Please note that additional reserves may apply for other scenarios, such as converting primary residence to an investment property. Trade line history. To be eligible, the borrower must have 3 active trades with 12 months of satisfactory history and at least 24-month credit history. Or, if they do not meet that, they can have a 5-year credit history, and at least 4 of those must have a 12-month period to review, and at least 1 of those were active in the last 24 months. Plus, all of them must be paid as agreed in the last 48 months. This product requires the following seasoning for major derogatory credit: 4-year seasoning for bankruptcies. If the same borrower has multiple bankruptcies, there must be 5-year seasoning. 7-year seasoning for foreclosures. Then, depending on occupancy type and transaction type, seasoning for deed in lieu, short sale, short payoff, or charge-off is 4 or 7 years, as shown here. A borrower with a loan modification requires 4-year seasoning. A 24-month housing history is generally required and may not have any of the following: 2 or more 30-day delinquencies in the past 12 months, 1 or more 60-plus delinquency, which is 60 or greater days delinquent, in the past 12 months, 3 or more 30-day delinquencies in the past 24 months, 2 or more 60-day delinquencies in the past 24 months, 1 or more 90-plus days delinquency, which is 90 or greater days delinquent, in the past 24 months. The investor reports that these are some of the common missing or deficiencies in documentation. Profit and loss statement and balance sheet is missing from the loan file. Source of funds for large deposits are not provided. 12-month housing history is provided when 24-month is required. HELOC closures are not provided. Credit inquiry letter of explanations are not provided. Full K-1s or business returns with all schedules are not provided. VOE with variable income, which is bonuses or commission, are not provided. Current, legally enforceable lease agreements are not provided on rental properties. Bank statements debts not addressed, as they need to ensure they are not recurring debt that need to be counted in the DTI. Payroll loans or deductions are not included in the DTI, and evidence loan is fully secured, which would allow it to not be in the DTI, is missing. Common reasons for denial reported by the investor. For home equity line of credits, if it is in the draw period and is new or unseasoned, which means it was opened less than 12 months ago, which includes HELOCs that are frozen since the freeze could be lifted by the creditor, the payment of the DTI calculation is the higher of the payment shown on the credit report, or 1% of the full line amount. All student loans must be included in the debt ratio, regardless of deferment status or number of payments remaining. If payment amount can be verified by credit report or by student loan lender, documentation supplied by the borrower, then use the greater of the 1% of the outstanding balance or actual payment. If payment amount cannot be documented, then use the payment based on 1% of the outstanding balance. Note, if able to document that the payment is less than 1% of the outstanding balance and it was fully amortize the loan with no payment adjustments, that payment amount can be used for qualification purposes. This means income-based repayment plans are not allowed. Some common DTI issues that cause a file to be denied include: for self-employed borrowers, ineligible add-backs, net operating loss, amortization, home office. Net operating loss is generally a loss from prior years that has carried forward because they couldn't or didn't write it all off on the year it occurred. It is very common to add those back and can have a big impact on qualifying. Self-employed, declining income reflected on year-to-date P&Ls, and in the case, they will take the worst-case scenario. Personal debt not included in liabilities due to evidence other parties pay. Note, you can never exclude a mortgage debt, and other debt can only be excluded as a contingent liability if very specific requirements are met. Additionally, installment debt with less than 10 months remaining must always be included. 2106 expenses not deducted from income, as they must always be deducted regardless of the income type. For borrowers with rental properties, when rental income is earned but not used to qualify, the PITIA amount as well as recurring operating expenses must be included in recurring debts. And to ensure adequate debt service is included in the DTI on interest only or below market ARM mortgage payments, the payment must include full PITIA. The investor is aware that it might be difficult to determine if the ARM mortgage payment is a below market rate, but indicated that there is requirement but do not have any specific requirements as how to determine that. Self-employed borrowers must have the following: a minimum of 2 years operating the same business. Provide a 24-month history of self-employment, regardless of work history. A minimum of 12 months self-employment reflected on tax returns. If tax returns do not reflect the complete 24-month period, then P&L and balance sheet must be provided covering the remaining period. For self-employed borrowers with mortgages or notes payable in less than 1 year must be deducted from the self-employed income by the amount of the debt, regardless if the business has sufficient assets to cover the debt or the debt has a history of rolling over. Finally, business assets are generally an eligible source of funds, although will now be considered if specific requirements as defined by the investor are met. Appraisal requirements. Appraisals must be ordered through an AMC by PRMG's appraisal team. Transferred appraisals are not allowed. They must be ordered in PRMG's name. You must have one appraisal by a state-certified appraiser for all loans less than or equal to $2 million. You must have 2 appraisals by a state-certified appraiser for all loans greater than $2 million. When reviewing the appraiser must be sure to identify and describe common elements appropriately on attached properties where the builder is in control of the HOA. We must ensure the appraiser provides appropriate comments reflecting reasoning for adjustments and reconciles indicated values of the comparable sales, explains weighting and rationale to derive the final value conclusion. The appraiser must provide a complete 1004D with photos when needed. The appraiser must document reasoning when there is a meaningful discrepancy between public record data and appraiser-reported information for subject or comps. The appraiser must include all required comp photos. Also, please note that use of MLS photos is discouraged unless a satisfactory explanation is provided. The appraiser must comment on using any comparable sale that's more than 6 months old, and they should not provide comparable sales that are dissimilar to subject property without detailed discussion. For a new PUD or condo project, a comparable sale must come from within the subject subdivision or condo project. Now let's discuss the requirements for reviews on condos and attached PUDs. Condos and attached PUDs, only attached PUDs, not detached PUDs, must be approved by the investor. They must be submitted separately from underwriting eligibility review to investor's condo review team. The condo can be submitted for approval prior to underwriting eligibility review or concurrently. However, before submitting, email condoreviews@prmg.net the condo project name and address to determine if project is on investor's approved project list. If on the approval list, the loan must fund 60 days prior to project expiration to be eligible for purchase by investor. If it is not on the investor's approved list, The review should be submitted by the Fulfillment Center to condoreviews@prmg.net with the condo review submission form and required documentation. They must complete the Gold Jumbo Condo Submission Form, not the standard PRMG Condo Submission Form. The Gold Jumbo Condo Review Submission Form can be found on the Resource Center or at this link here. Pricing the loan. The Gold Jumbo product will be available via FT360 and on the rate sheet. This product is priced aggressively, but Secondary handles the pricing, and all questions regarding pricing should be directed there. When pricing, you must select Jumbo as product type in FT360 or Optimal Blue. Underwriting requirements. This product must be underwritten by a Level 4 designated Jumbo underwriter. Additionally, as mentioned, the loan must be submitted and approved by the investor. Both a credit review and collateral review will be performed by the investor. Compliance with all state and federal regulations, including but not limited to the issuance of all applicable disclosures, is required. All eligibility review requests should be sent to jumboreview@prmg.net. The following must be included in the file prior to submission for eligibility review. The appraisal in the first generation PDF must be attached to the email request sent to jumboreview@prmg.net. Eligibility review submission form must be completed and attached to the email request sent to jumboreview@prmg.net, which can be found on the Resource Center or at the link shown here. 1008, Underwriters 1003, and current approval must be uploaded into the e-folder before submission to jumboreview@prmg.net. All documentation required on eligibility review submission form must be uploaded into the e-folder prior to submitting requests for eligibility review. It does not need to be sent to jumboreview@prmg.net as it will be downloaded directly from FT360. Turn time for review varies based on investors' current workflow. The information provided here is an estimate and can vary significantly based on volume. Times can be from 5 to 7 business days from complete file submission for a purchase and up to 15 days for complete file submission for a refinance. The first 24 hours is documentation review, and if documentation is missing, we will be notified, and the 5 to 7 business days will start at submission of the missing documentation. Turn times can be less. It truly depends on the investor volume. Things to consider. These products are not like standard conventional or government products. They are going to be more time-consuming and have additional documentation requirements. These loans have to be fully documented and may contain conditions that are not typically seen on conventional or government products. There are no exceptions to the documentation requirements or the compliance requirements on this product. These products are unique and we must meet the investor's requirements. All credit documentation must be signed prior to consummation date. Document expiration timeframes may be shorter than on the standard agency products. 1003 and 1008 and all other underwriting documents must be accurate. Accounts must be listed separately. Balances and amounts must be updated. Use submission checklists to ensure all necessary information is included. You are highly encouraged to review the product profiles and expanded guidelines to become familiar with these products and the additional requirements. You can find the link to the product profiles here. Anticipate and plan for the time it is going to take to get these loans through the system. Set proper expectations with the borrowers and the realtors. Again, this product will be released on Wednesday, August 24th for the retail channel only. Pricing will be on the rate sheet as well as in Fast Track 360 and Optimal Blue. In addition to the requirements for eligibility review, the Compliance Department must complete a final review of the file for compliance acceptance prior to funding. You will need to email the loan number and borrower name requesting a final funding review to compliancereview@prmg.net. Again, funding will not be allowed until all eligibility review conditions are cleared by the investor and PRMG's compliance team has done a final review of the file. I want to thank you for taking this time to view this training presentation. If you have any questions regarding this presentation, please email prmguniversity@prmg.net.